Okay, joining me now with a closer look at the markets and all the issues with the oil, Eric Schiffer. He is the chairman and CEO of Patriarch Equity. Thanks for being here, Eric. Okay,
absolutely. Good to be with you.
First question for you. I was always told that, low oil prices, net positive, people got more money to spend, it goes into the economy, it drives consumer demand. Last year, because the prices were so low, on average, households had more than $500 to spend, which they wouldn't have had. Right. Why is it not the case now? Why isn't it filtering through, or at least doesn't appear to be filtering through?
Well, I actually think it is filtering through, John. I think that it is. I think that the numbers are not that bad. I mean, we're certainly not in a recession at this point, and certainly doesn't look like it will be a recession. I give it probably 25 to 30% in even 2017. So I think it's a good thing that consumers are getting this, and I think it's actually helping the country. Clearly, oil has also, caused a lot of pain. I mean, you look at the fracking industry, it's been decimated, it's been destroyed. Yeah. And it's crushing a lot of people, and that's affecting the stock market because these investors are having to liquidate many positions, many things that they own because they've got to pay their bills.
And with that, I mean, there's been a record number of bankruptcies in the oil industry. Absolutely. In the United States. I think it's up by more than 300% this year. How exposed are the big banks that basically bankrolled these fracking enterprises with debt?
Well, I don't think that they're tremendously exposed. It's certainly not like the Lehman days.
But they're putting aside hundreds of millions, if not billions of dollars, aren't they?
Yeah, they're putting it aside, but they're not in this situation. This is not 2008.
Okay,
That's
good to hear.
Yeah, absolutely. It's a completely different situation. But I do think that you're going to see a lot of people concerned about the banks, especially with these negative rates that are going on in Europe, specifically.
Japan, yeah.
Look, the banks were making money from the Central Reserves, and so now that's changing, and that's going to affect things. And negative rates with Japan and Europe yelling at it potentially being here, investors are concerned about that, and you're seeing them sell off.
Okay, we've got issues is with the production and storage, and right now they keep pumping it out at this this oversupply because they got somewhere to store it. Right. Will there come a point where there's nowhere left to store it, and essentially supply and demand comes back into balance? I mean, is that what we're looking at? Is there a time frame on that?
Well, I think, look, if you can't store oil, you got a problem. And so the people that are facing that right now, they're facing problems. And what happens is oil's going to go down because of it. And I think we have potentially further to go. I don't think that we've reached the bottom. When you can't store it, what's it worth? And so you got a challenge.
You flood the market with more and more. So
Absolutely.
What, it goes down into the teens?
I think it could go down to the teens, precisely.
Oil will have a 1 before it, okay?
Well, I think so,
okay.
Yes.
And then explain to us the relationship here between, because every time oil goes down, the Dow tanks a little bit more, or we see this Shanghai composite go down. So which one is driving which, and what's the relationship?
Well, I think originally it was China that was driving the market, and the fears of China. I think that's overblown. I think it's not going to be as bad as people are thinking. I think the market has gotten ahead of itself. But that happens right now because the Fed has been like the cage in a zoo. Okay, and the Fed has decided they're no longer going to protect the market. So the animals are running loose is what's happening. They're running all over the place.
Right.
And that's this volatility that we're seeing. And this volatility is bad, and it will continue to be because the Fed doesn't have the power to control things. And that's what we're seeing. And so originally it was China, and now I think it's volatility. It's people that are concerned. They're concerned about, do they really want to get into this? If you're on a speedboat in the ocean and there's a lot of waves, and it keeps being rough, you're going to start slowing down because you don't want to damage the boat. That's what's happening.
Eric Schiffer, thanks for coming in.
My pleasure.
Appreciate
Good to see you.
Yeah. Cheers.